you hold municipal bonds, you well know that yields right now are pretty puny. Well, with so many cities in America under financial stress, just consider Detroit, is it a risk now that is rising, or might there in fact be an opportunity here? Let's talk with Jim Cahn, he's Chief Investment Officer for Accession out of Minneapolis. Let me first ask you about Ben Bernanke's comments yesterday. That'll have impact on the bond market.
Yeah, sure it will. So municipal bonds tend to trade with treasuries. So as treasury yields rise, we're going to see a rise or a decline in the value of municipal bonds. And so, I think Bernanke is looking for an orderly rise in treasury yields or an orderly decline in the value. And so over time, I do think we'll see a sort of a natural rise in municipal yields as we see a rise in treasury yields. But he's pretty slow and stable. He's pretty cautious at this point.
Well, one factor that may bump up yields is this fact that so many cities under stress, and like Detroit, there's a 50-50 chance it could go bankrupt.
Yeah, Detroit's a pretty interesting situation. So we have a city, Detroit, which has lost 2/3 of its population since 1950. Only 53% of the people living in Detroit are actually paying property taxes. So the bond market knows that Detroit's in a little bit of trouble. Now, that said, there's some interesting precedents being set in Detroit that if you're a municipal bondholder, you might not like. So, for instance, general obligation bonds, or bonds that are backed by the taxing power of the municipality, so in this case, Detroit, it was thought that those would be off the table. So if you owned a general obligation bond, you were thought to be safe.
Is that a general revenue bond?
That's a general revenue bond. It's now believed that under the city administrator's plan, those bonds are on the table, and those bondholders are likely to have to take a haircut. That's a dangerous precedent.
But for bond yields, is there any upside to what's happening in Detroit when fear is entered into the marketplace?
So we saw this with Meredith Whitney. So when Meredith Whitney came out and talked about the thousands of defaults that we were going to see across the landscape of the municipal space, bond yields spiked. And that was a great buying time for people who are interested in getting into municipal bonds. Now with the Detroit situation, we haven't seen a big move yet in yields. But if we see a default in Detroit, and we see a restructuring where the state says, hey, it's okay to pay bondholders back 10 cents on the dollar, even if it's a general obligation bond or a general revenue bond, we could see a spike similar to what we saw with Meredith Whitney. And that's going to be pretty painful for people holding municipal bonds, but it might be a really great time to sort of get into the market.
Buy the bonds. All right, Jim Cahn from Accession. Thanks so much.
Thank you.